All right, this is the VWAGY, the Volkswagen AG short squeeze video. I've seen a bunch of kind of charts of the looking at Volkswagen short squeeze and sort of comparing it to GameStop. This is the nuclear bomb style short squeeze. This went from $4 to 115. It's absolutely freaking insane. Yeah, so let's take a look. This is going to be really cool because my chart is on auto adjust and we can check some stuff out. That's pretty cool. We have this green dot data back from when it first took off. They like went back and filled it in because it's so awesome. So yeah, this is TradingView platform, which I have no affiliation with anyone, but people ask all the time. And yeah, so let's look at some bubbles. What bubbles look like short squeeze bubbles, and just bubbles in general, kind of what they look like, how they progress up. We're going to look at GameStop. We're going to look at the Volkswagen short squeeze and maybe AG, the silver miner, because Volkswagen AG and all the nonsense talk about silver squeezes and stuff. Let's look at silver and First Majestic AG as well. All right, so here's Volkswagen. Yeah. Okay, so here's the first bubble takeoff, and this is just kind of a normal crazy bubble. And we had some of those really early. And you notice it started in 1997. If you go back on the GameStop chart, we'll go back and take a look at it like this and see what's up. But so it starts taking off from $4 to 14 to 28, starts getting crazy. And then leading into the nuke, you can see this chart that just kind of bubbled up and came right back down to around the takeoff point. And then boom, it went freaking, well, it looks crazy parabolic. Oh, it is. I mean, it is, but this is like over, these are, yeah, 2 daily candles. Daily candle. So it took, it took what, 2006 or whatever to 2009. It took like 3 years to get to the short squeeze. And it ripped down over a month or so. This bubble was about a month. And some people are comparing this to, if this is the bubbly looking thing, then well, where would we be? Like here, we just hit like a floor, right? So if the floor falls out, it might be like 3 or 4 more, 3, 4, 5, 6 more days or something until the nuke goes off on our current chart. Or if the floor holds, I looked at the Tesla short squeeze chart so we can kind of see what's happening. But I mean, if this is an analog to the GameStop chart, then we're like here, right here. And it's like a couple more days and then nuke. So that's cool. And just the height of this thing, it went from 55 to 116. And we were like right at 550, right at the top of ours. So the GameStop top was around 550. So if it goes nuke to that, just add a 0, 100 and whatever, 1100. Like if it's comparable, this would say like 1100 straight up. And who knows if you can trade it. I mean, this would be happening over the course of less than a day. This would be a day trading session on our time zone, because this is like a month here, and it's only like a week for us. So 2 days is like a half a day. This would be a half a day trading session when this thing goes freaking nuclear. And you have to trade out of this thing before it comes back down to 500 or something. Yeah. So that's kind of the look at this thing. So if if we get a chart like this, I mean, I'll show the that would be just absolutely nutty. Anyways, that's the Volkswagen short squeeze, and then after the squeeze, it held on for a minute, and then it kind of came back down to normal, not normal value. It was like $4 before the whole squeeze, and now it's 10 or something. So yeah, that's pretty wild. Or if that 500 top really was our whole short squeeze, and we came back down to that little V bottom, and now we're flat on the shelf, then it could be over, and we're just crashing. So that's kind of the look. Are we in like the pre-bubble takeoff spot, or or was that what we just had, the bubble, and we're gonna just like fall like now? Because this is like, if that was the bubble and this is it, like it could be here, but like this one fell before the nuke. So I think it will be pretty interesting holding over the next week or something. We might see a nuke, and we might see like a shelf that just falls off here. Let me go look at a Tesla one too for like a more normal kind of short squeeze chart. That Volkswagen chart is pretty crazy. And yeah, I drew all over this. I had a cool little picture I drew, but let me just get this stuff off of here. So this is the Tesla squeeze from 40 to 190 here. This is the pre-bubble, and then this is the short squeeze that we have on Tesla going right now from 70 to 850. And I was just doing a video kind of looking at the top of this thing. Like, are we rolling over here on Tesla? We just broke down off this trend line. So we can either roll back or we can go parabolic. There's a bunch of crazy stuff. Like Tesla's in a really weird spot where it's either going to slingshot up or down, I think, like right now, over the next 2 weeks, because Tesla, this is an entire year of a bubble here. But this is a similar thing. Like if you look at this compared to GameStop, you get your double bubble takeoff, your breakdown, your bear trap at the bottom, and then you have your takeoffs here. And so I think that's kind of where we are on our chart, just based on the short interest and everything else. But yeah, so I mean, we're kind of at the spot now where we either go nuclear or start a trend line that kind of matches the previous trend line, or we just like fall off a cliff down to the bottom. So this could be a wild and crazy couple of days. I think I'm favoring this Tesla chart, as I don't know, that Volkswagen, I don't know, the short data right now is saying that it's like 50% short. We don't have any official numbers, they're all estimates. And I don't remember how short people were on Tesla, like 30 something. So like this is a 30% short kind of squeeze. But like people just kept saying like Tesla can't go higher, and shorting it and shorting it and shorting it, and it just kept squeezing and squeezing. And so that's kind of the thing. Like if GameStop just kind of starts going uphill, people will start shorting it, and that will just cause it to squeeze and bounce more. And no one will be like, if GameStop's already at what, it went from 500 to what's it, around 100 now. Let's go look at it. Yeah, here's GameStop. So what's going on now with all the short squeeze stuff, like 15-minute chart, because it's so fast. I mean, these are days, so it's just like a week is this whole bubble here. So this doesn't look like, this chart does not look like a nuclear bomb short squeeze for someone that's 120% short, not just like one person, but groups of, funds, hedge funds and stuff were 120% short on this thing. And like, this obviously isn't the nuclear bomb Volkswagen chart here. So I don't think that the squeeze is over. We still have enough short interest to just do like a Tesla chart. And it's possible the short interest is way higher and we do a nuclear bomb. But just like setting this up to look like the Tesla chart, I think is the most likely scenario. And we have, bubbled, chopped. We fell through this support line. And now we've triple tapped on the bottom here, headed uphill. And now we'll have to see if we, if we get like a nuclear bomb. That's the Volkswagen chart, like right here. Or it might like pull down and then nuke. I think the Volkswagen chart didn't like floor out, I don't think. But it pulled down and then went nuclear to 4x the height of this thing. Anyway, that's the Volkswagen idea that people are putting out. The Tesla idea is you just kind of pick up this trend line here and just go off on a bubble that would be a couple of months or something like that. And I think that may be the most likely. I think we just pick up a trend line and it's a good stock for a couple of months and then probably get up into crazy bubble land. That's what it looks like to me. And I think like this uptrend heading into the first bubble just looks like a normal floor that we picked up here. This was the 20 takeoff and then you land a little higher than where you took off at. What, 45 was the takeoff. So you land like a little bit less than double there. It came down to 70. That looks like kind of a normal kind of bubble landing like Tesla did. And then the other, like if you try to look, if this was the short squeeze and it's over, then this little uphill part is going to be a false shelf. And it would go from 80 down to wherever, 40 something, back down to normal GameStop prices, whatever that would be. I don't know, 30 or 40 or something like that. So those are kind of the looks, and I kind of favor the Tesla chart with odds of a nuclear bomb or something at some point. But Tesla was going like vertical now, but it's not like nuclear looking vertical. But I guess it could do that. I mean, Tesla could potentially accelerate to the upside now. I mean, look at the Tesla chart. Like, that's crazy. So there's a little pre-bubble here. That's what I was just looking at on GameStop. And then climb. Then you go into a higher trend line. It starts the breakdown. So if this doesn't break down, then it's going to do back up to the trend line and then whatever crazy bubble stuff at the top. So, I mean, that's relatively insane for a stock that's probably, in the same category as all the other auto people that are around $20 or $40 a share. It's has nothing to do with the underlying company. Like, the only fundamental of the underlying company that affects the stock is bankruptcy. Because if the company goes away, all the stocks are worth zero and they go away. Like, all the stocks are eventually worth zero. But people talk about fundamentals all the time. And here's my outlook on the fundamentals. None of this is financial advice, of course, but basically like in the 1800s or something, if you were investing in a company, you like actually own part of the company, and the company, you get part of the company's profits. Like, that's the idea of investing. That's what people tell you is happening now, but it's not true. Even for like dividend stocks now, it's not true. Like, the way that it works now is basically you give a donation to the company. The company prints shares, so it's either like an IPO or like a stock issuance. the company prints up shares out of thin air, sells them to investors. So like Tesla's 800 something bucks, right? So if Tesla printed like 1 million shares and everyone bought them for 850, then Tesla would have a mess of a mess of money. $854 million from that, like almost $1 billion if they issued like 1 million shares. And then they keep that money and they do whatever they want with it. And in return, you get a stock, which is like a coupon that you can just trade back and forth with other people. And nobody ever has to, like, the company never owes you money back for the stock. Like, if you look at the stock certificates, it says it has a fair value of like $0.0001. It's like way less than a penny that the company actually owes you back for the stock, like ever. If they go bankrupt, I guess they owe you that amount, which would normally round down to $0, unless you had like thousands of shares, then maybe you'd get a couple of pennies or something. But the company just doesn't owe you back for the stock. And like shareholders, like a retail trader, doesn't have any say in the company with 100 millionth of, if you have shares, like you have like 1 millionth of the company or something. And then most stocks don't pay dividends, but even if they do pay dividends, they're not. It's not like an agreement, like if you bought 10% of the company, like you get 10% of the company's like profits forever or something. It doesn't work that way. Like you get so many dividends per share, and it's like based on company profits sort of, but they just like assign whatever amount they want to dividends. Like if the stock crashes, usually the dividends crash with it. If you go back and look at like my oil tanker playlists, I've looked at dividend stuff a lot with those. And you could see like when the stock's up, dividends are good, and when it crashes, dividends go close to zero. So it just doesn't work the way that people think it does. Fundamentally, like it's just not connected. Like if the company issues new shares that waters down, like then you have even a smaller percentage of all the shares. That's like printing new shares, like inflation or something. Um, and then if they do buybacks, then they're like destroying a share out of the pool. It's not like they have a stock and they're holding it; they just like destroy it out of the stocks. But the whole buyback thing is kind of silly too, because like Tesla's been doing buybacks for the whole time, and it's like their number of shares just keeps increasing. So like it's like print 4 shares and then buy one back. It's like that's the number of shares is not going down on any of these stocks. Anyway, so those are the kind of the fundamentals, but the one big fundamental is bankruptcy. Like that's a real fundamental. Like if the company goes bankrupt, the stocks go away. I mean, there's like bankruptcy where you can restructure the company, like a bailout kind of bankruptcy, where you don't actually go bankrupt. But like if the company actually goes away, the stocks are worth zero and they go away. And that's what eventually happens to every stock. Like you just trade it back and forth. The company never gives you anything. Like the only way to get money from the stock is to sell it to another investor in the stock market. And so it's like even calling it an investment is really misleading. Like you're not investing in the company. You're buying like it's like poker chips that you're like trading around in the stock market. It's like playing poker or something. Um, and then yeah, anyway, that's the kind of the fundamental thing is the only big fundamental is bankruptcy. The share issuance has a small effect. It just slowly dilutes the stock, but it's just like a small percentage decrease in the stock's value when there's new ones printed. Um, and then I guess, yeah, I kind of like ran off track there, but that's the idea with the stock market, and everyone's talking about fundamentals. But more important than like the fundamentals of the company is the fundamentals of options trading and derivatives, which Warren Buffett refers to as financial, what does he call them? Financial weapons of mass destruction, where like not only is the stock not connected to the company, which like hardly anyone talks about. And Warren Buffett knows that very well. But like the options are like leveraged side bets on the stocks. So it's like another layer of leveraged trading. And then the way that it works and the way that a short squeeze works is if you do a bunch of call options, which are like leveraged bets to the upside, and then it starts going up, the market makers that sold you that option have to buy enough shares to pay the option off if it finishes in the money. And so the market makers are buying up all these shares to cover the options as it goes up, and then it just makes an up move, like go exponentially up, and then it comes back down. So if you look at the uptrend lines for bubbles, like you can see like jumping movements sometimes, and that's usually stock option buying and gamma squeeze. It's called a gamma squeeze when you get a bunch of call options and it goes up like vertically, like bubbles, like a bubble up on just like a trend line is like gamma squeezes, and then it usually comes back to the trend line, gamma squeeze, come back to the trend line, boom, gamma squeeze. So that's what I was thinking here on Tesla is like, okay, this is a big one though. So I mean, it could just like chop out to the trend line and pick it up, or we could boom stay on this trend line and go vertical. Those are probably the most likely scenarios here. It's possible it breaks down from here and like really breaks down. I think that's a lot less likely. Yeah, yeah. I don't know. I think it's like almost like a 50-50 that it like shoots up and picks up this trend line or breaks down and goes to this one at this point because it just broke down off this trend line. So it's either got to do a false breakdown, kind of whipsaw, or here. I think there's like extra risk right now because the dollar is doing a breakout. Let's look at the DXY. Yeah, here's our dollar chart. So this explosion up was the 2020 crash, and then this entire weak dollar move was this whole last year where we had a raging bull market. And our bull market is kind of hard to call it that because it's such a short kind of move, but we've just bottomed and reversed on the dollar here. Like this is like looks like it's kind of bottoming and reversing, but it's stayed in the channel and ripped back down. But this is the end of the channel and it's squeezed and broken out of the channel now. So I mean this could be like a long-term freaking ripper dollar move that just like destroys the stock market, or we could just kind of catch resistance and just kind of head back down, and it'll just be like kind of a choppy, just kind of like a little choppy sideways thing in the stock market, and then you go back to bull market stuff. um, yeah, anyway, that's kind of a look at the dollar and the extra risk, and then of course GameStop super short squeeze, adding a little bit of risk to the market. I mean, like if the nuclear bomb scenario happened, that could affect the whole market. But I think like the little Tesla bubble scenario wouldn't be a big deal for the whole market. But that sucks trading just like insane. And then yeah, we were looking at Volkswagen AG. So let's look at First Majestic with the ticker symbol AG, because that people are talking about a silver squeeze also. So I thought I would mention it. What are we on, daily candles? That's not going to be very helpful. Yeah, we were looking at what did I say? Silver squeeze? Oh no, what am I doing? Okay. Yeah, we were looking at silver squeeze stuff. So yeah, all the not financial advice, blah blah blah. All of the people in the Wall Street Bets Reddit are like that silver squeeze stuff did not come from us. Like we've been talking about the GameStop squeeze for months and months and months and setting it up. And the silver squeeze is just some idea that floated through the last few days. And nobody knows if it was one of the normal users that just posted a short squeeze idea because of all the short squeeze talk, or if it like there's conspiracy theories that like hedge fund people came in and put that in there to try to take attention away from GameStop or something like that. But anyway, this is First Majestic Silver Corp. It's a silver miner, and people talking about the silver squeeze. Like the real idea with the silver squeeze is you buy all the physical silver up, which everyone did and like already. like this week, like all the silver shops are sold out and closed. Like the entire year's mining supply of silver got bought out in like 3 days. Like usually the silver supply doesn't get bought out until the end of the year, and it's already sold out, the whole mining supply, um, which is nuts. So like the physical silver squeeze thing may actually be happening, but it's not coming from WallStreetBets. And the idea that I need to look up and do more research on as far as the silver squeeze goes is you get silver futures contracts. And so a futures contract is, well, like we saw in some oil videos on the oil playlist, like a futures contract is a contract for physical delivery. So like some people that bought those oil futures and were trading them got stuck with like actual physical delivery of oil. And like the oil futures went to negative $40, and some people got stuck paying a ridiculous amount of money out, losing money, and then getting a physical delivery like that. I don't even know how you take physical delivery of like a huge amount of oil. That's insane if you if you didn't understand what you're trading on futures. But um, the silver futures are the same thing. It's a contract for physical delivery of silver, but like just no one ever actually gets physical delivery. But the idea for the silver squeeze is you get the futures contracts and you demand physical delivery, and just like people just get all the silver in it. There'd be a huge like squeeze on the physical silver, and that would expose that the it would expose that the like JP Morgan and the SLV, like the paper silver, doesn't actually have enough silver to back it. It would expose that, and then it could be a big fiasco, and silver prices could go up as a result. I mean, I think the silver squeeze is a real thing that could happen, and silver has been squeezed before, more than once. Uh, yeah. Anyway, this is First Majestic Mining Company. So this is a stock. So it's a dividend stock, I think. But uh, just like I was saying about stocks, like this company is not about to go bankrupt. They're a stable, really good silver company, and like the company's stock is not really based on the silver price. It's just like the hype of silver would affect a silver mining company. Like usually miners go up if silver's going up. Then that could be the case here. So we had this, super hypey silver squeeze news, and this thing went all crazy. And now it looks like it's settling back down to a trend line. So it like came up here, right, and took off. And I think we're settling into a trend line here. And if it does pick up support here, then this could be a pretty cool trading chart. And especially if a silver squeeze starts happening, it's possible to follow that trend line for a while. It's a pretty good trend line. Where did it go from 11 to 16? Like that's a pretty sharp up trend line. It doesn't look that high just from the angle of my chart, but it's pretty steep. I mean, this thing went from 11 to 26 in a few days, and now it's picking up a pretty steep trend line. Well, potentially, if it does pick up a steep trend line, it could bounce uphill a bunch, kind of like Tesla or something, and then it's possible to pick up a higher, angled trend line at some point, and that's when you have to be really careful and potentially get out of it when it goes parabolic. But that's kind of the look at the AG miner, which I think is a really cool stock to watch, and I haven't found an entry point. Like it was somewhere around here the first time I was looking at it this week, and so just waiting to see if it picks up a trend line, and then this would be cool. Like the mRNA stocks were doing this stuff, all in the middle of last year. They would do this kind of like crazy news takeoff thing, but then they'd land high on a trend line, and it would go and go and go, and they just ran uphill. Like Zoom did that, like mRNA. Like it's possible this does something like that. Just watch it. It's a cool one. And then semi-related to that is silver, which is breaking down off of its bubble takeoff, huh? Yeah. It looks like silver is going to come back down at least to normal support, and that was a completely fake takeoff. Let's go out a little farther. So silver, silver has been trending around whatever, $17 forever, for a long time. It did a pretty good rip down. But this is like the paper silver price. Like, it ripped down in the 2020 crash. But I mean, when this was at 18, silver, like actual bullion coins, were like $23-24 each or something. And then it ripped down to 11 supposedly. I was in Singapore when I was around 14, I think, and the cheapest coins they had were like $25 there. And like First Majestic, the bullion shop, was like 22 is the cheapest I ever saw it. So I don't know about all this mess. And then 25 here, like the silver from First Majestic was $30. I got some this Saturday at $30, but yeah, they just overcharge you for the silver. There's a premium on top of the spot, and sometimes it's ridiculous. Like, it was $11 and the cheapest coin was 22, double the price of what it's supposed to be. But I guess in that case, the paper silver would be a better deal. But yeah, anyway, here's the silver, and it got the little hype, silver squeeze hype blast, and it came down, and it doesn't look like it's holding a higher level trend line, like it's going to go off into a bubble. To me, it looks like it's just going to come back down to support, and we'll see if it holds support, or if this strong dollar, if the market starts coming down, if the strong dollar matters. I'll look at the S&P again here. I already looked at the dollar this video, I think, but the S&P pulled down off its channel, back tested off the top of the huge volatility zone, and we have this like trend line that we were underneath this trend line for 2 years, tapping up on the top of it for a while, and now we broke out and tapped on the top of it. So this is either going to be a false breakout and we break back in, or this is going to be like a whipsaw, like bear trap, and we're going to freaking go parabolic up. Right. So that's the idea. And this has been pretty wild stock market this year, but yeah, that's kind of the outlook on the market. And so if the stock market starts crashing, that's generally not good for silver. Like, people sell off silver to cover stocks and stuff like that. And if the dollar goes strong, that's not good for stocks, because then people sell off stocks and switch into treasury bonds. So it looks like the strong dollar right now is bad for the market. The potential of GameStop exploding is bad for the market. Silver is looking like it's on a good, trend line, and it may be like a little bubbly trend line. It's a high angle trend line, but it may be a legit trend line. Like, if this crash, that's where we started doing MMT, like modern monetary theory, like Fed buys treasuries directly from the government, and then the government creates new inflationary dollars into the economy, sending the stimulus checks. Like, the last time the government was doing something like that was like World War II, and that's exactly where interest rates bottomed, and we went into like the inflationary run up for 20, 30 years or something. So if this trend line is just an inflationary, if we switched from sort of a deflationary, we had like 40 years of deflation. If this 2020 crash was a switch into an inflationary environment, then silver probably will be really good for a long time. Who knows, like 30, 40 years or something. Or not. Or we could just rip down right now. So I guess I'm thinking that we are entering an inflationary environment where stocks probably keep going up, and silver probably picks this trend line up and keeps going up. Because MMT is like, we bottomed out on deflation, where deflation was bad to the point that the government had to start doing direct helicopter money. And so that helicopter money is the government's way of like trying to kickstart inflation back. Oh, if I don't know how to. No, there's a long chart of like interest rate trading and stuff like that, but like it was, high from the 20s, like the before that, like interest rates were high around like 1910 or something, and they came down to like World War II time. So it was like a deflationary downward move in the interest rates down to like World War II, and that's when Bretton Woods and like the world dollar started, and then it was inflation took off up until like 60 something, 66 I think might have been the top of the interest rates. It was like the Volcker moment, the top of the interest rates, and then it's been coming down, being deflationary since the 70s until right now. And we potentially just switched into an inflationary environment here on the 2020 crash, but it's possible that we haven't yet. It's possible that interest rates like go negative and it drags out a little bit more. Um, so yeah, this is kind of the thing to watch is if we're going into inflation, then silver would be pretty good. I think silver and gold are like killer good inflation hedges, and they and they back the monetary system with gold last time, so they made gold illegal to hold or own. So it's possible if they're trying to back money with gold or silver, they could make it illegal again. But until then, I don't know. Like silver is potentially underpriced, and they could make it illegal, and then they could reprice it up to the price they want to use to back the monetary system or something like that. Like JP Morgan has a huge pile of silver. It's possible that they want to back like some American stable coin or something with silver. That's possible. I think most of the gold now I think is like China and Russia and like Germany and Iran and stuff. All those countries over there have been piling gold. So I have like thought about the scenario that we have like competing currencies coming in. There could be like a Eurasian gold backed thing over there, and it's possible we could back something over here with silver or Bitcoin or something maybe. But yeah, I don't know if like these deflationary bottoms are kind of like where you back the money and then go into an inflationary kind of thing where you print more dollars than the backing can handle until it breaks and then come back down. It's like the same cycle over and over. But yeah. Anyway, JP Morgan has like half the world's monetary silver vaulted. So I've been thinking about like, are they trying to make a banking like silver backed digital currency or something like that? That would not surprise me at all. Or like a whole Eurasian intergovernmental kind of gold backed currency over there. They have a bunch of gold. Uh, yeah, and then Bitcoin is always crazy. What's Bitcoin doing? I kind of wandered off track. What was this video about? Volkswagen? This is the Volkswagen video. Yeah. Yeah, we're way off track. So this was great. Yeah, I did a couple of Bitcoin trade setup videos, and looks like they were pretty right on. So this thing, Bitcoin exploded up off of its trend line, and Bitcoin has the tendency to go bubbly. So this is like a big bullish pennant here, and it's ripping up. So it might be time to draw another trend line on this chart, because usually when you get a takeoff and you get a bullish pennant that rips up, then you have a higher level trend line. And I can go back farther and look at previous Bitcoin bubbles. Do I have the auto scale on? Let's turn the auto scale on, and then I can show you what I'm talking about. Yeah, so Bitcoin just ripped up flagged into a trend line and ripped again, it looks like. And so that looks pretty wild. What's the movement here? 18 to 32, and then who knows, if like this kind of thing, it'll rip up a bit and then it'll kind of flag over and rip up again. It could go to 50 and just start bouncing uphill, kind of like we saw Tesla do. But if we go back to the last big bubble, Bitcoin was kind of boring for a while after that thing. But this is the last big Bitcoin bubble. And I mean, everyone knows it went absolutely nuts, but like here's kind of a takeoff and a flag. And so it's just like kind of flagged and ripped and went to a parabolic top here. But I'm just on daily candles. But like this area here is similar. Like you just get increasing trend lines. Like you go like to there and then you take off on a higher trend line, like through like here, and then parabolic takeoff up through this zone, something like that. Like Bitcoin likes to do this kind of thing where it like boom takes off on a higher acceleration, boom, bubble, big flag. So like if Bitcoin repeats this pattern, like I think we would be right about here. And we could like take off and flag and take off again, and then maybe that tops. Maybe we're like halfway up. I mean, this is a pretty mean little flag that it did here. Anyway, that's kind of a look at Bitcoin. So if it did this exact pattern again, then 16, we were like almost at the top of where Bitcoin would pull back again. Yeah, and then you get the return to normal thing. You get the blow off top, the return to normal, and then you get like the bear market. So like finding the top and getting out of your longs and switching into shorts is really tough. But once you get the blow off top and you can just kind of see the lower peak, like that's actually pretty easy to short into a bear market if that happens again, which would not surprise me. And we did have, I don't know if I can pick it up on a daily chart. When there was other Bitcoin bubbles back here, the previous Bitcoin and Dogecoin bubble where it went from like 20 to like 400 or something was a big deal, to me back in the day. But I can't find it on this chart, so let's forget about it. I don't know if that's it. Maybe this is it. It doesn't look like much. The huge bubble of 20. I don't know. That might have been it. Like something like that. Yeah, it looks kind of bubbly. That might have been it. Like there was like a bubble where it went from like 4 cents to like $2, and everyone's like freaking out, like, oh, whatever, this is stupid. And then it went from like $20 to like 400, and everyone's like, whatever, this is stupid. And then it went, and then it went from what? Where did it go? It was crazy. Yeah, this is nuts. Yeah, and then it takes off from like 500 to like 20,000. And then people started paying attention. Finally, like the third big bubble. And now this is actually really fast after the previous peak here, because the last couple of Bitcoin bubbles had a really long run out before they took off again. But this is obviously a pretty steep parabolic looking takeoff. So this thing makes me think we're maybe, like one more flag and one more one more peak, and that's probably it for Bitcoin until it pulls. It'll probably pull back down to, you know, whatever. It always lands higher than the takeoff. I mean, this takeoff was 2,000, and it landed finally at like 3, just higher, a bit higher, 3,500 or something. Yeah, really drawn out bear market after the bubble. So yeah, that's what Bitcoin does, and that's kind of bubbly stuff. And so that's what we're doing. I mean, there's like hardly any investments that are a good deal or safe. It's just pretty much all of the currencies are speculation. Like the dollar could go bad, the silver could crash, like Bitcoin could crash, like all the currencies are a sketch. Like property values are through the roof and property taxes are going up. Like all the property stuff is all complicated. And then we have, who knows, maybe GameStop short squeeze is the safest place to be. Like the nuttiest speculation that anyone's ever heard of is actually the safest place to be. Just like Tesla was the safest place to be last year. And everyone's like, whatever, this is crazy speculation. But that's kind of what things are looking like now. So good luck, happy trading. Hit the like button if you're still here. You're crazy. Let me get out of here. Cheers.